back to another video. If you're new to the channel, a sub would be really appreciated. And as always, if you enjoy the content, please smash that like button for the YouTube algorithm. And if there's anything that you would like for me to cover in my next video, just let me know down in the comments below. Today we're going to take a look at the dollar index ahead of the NFP today, and I'll give you a detailed breakdown from a technical, fundamental, and order flow perspective as well, and look for the best probability in how we can approach the situation moving forward. Because once you understand what's going to happen on the dollar index, you can literally, kind of get an idea of what's going to happen across most currency pairs, because we know they all trade against the US dollar, including stocks, the Dow Jones as well. So we're going to look at the dollar index here from a technical perspective. Now, here on the monthly time frame, we can see how the market had broken above this level of resistance and printed this clear impulse. Now we had that correction happen there as well. Now if we take a Fibonacci there from the low to the high of the impulse, we can see how the market had tested and rejected the 0.382, which is the first Fibonacci level, as an indication of a strong bullish momentum. So we can also see how the market had printed this massive long candle here with this wick, so we can definitely expect the market to go and fill in that wick as well. I've spoken about the same thing in the video that I've done yesterday. Now you can see also how the market broken below this level of support, and it's currently testing it as the resistance as well. So we cannot just go into a buy straight away from here, because we are testing some different, well, we are testing a level of resistance as a structure there as well. So it wouldn't be ideal for us to just go into this market and just look for buying opportunities. Now dropping down on the weekly time frame, what do we have over here? Now firstly, we can see how the market had been stuck within this range, but because we are expecting a continuation to the upside, we obviously need to wait for the best time to get into the market as well. We can also see how the market also printed this head and shoulders pattern, which is a bearish pattern in the market, but because we are stuck in a consolidation, that basically just invalidates the head and shoulders pattern as well, because we know we've got that impulse correction and we expect the next impulse to the upside as well. Now on the daily time frame, what do we have? Now on the daily time frame, we can see in the consolidation the market had printed this W formation, and by definition when the market prints a W formation, you expect to pull back to the neckline before the continuation to the upside as well. Now we can see how the market had broken above this level of resistance, came back and tested it as support now, so we could potentially start looking for buying opportunities for the market to continue higher, also ahead of the NFP coming up as well. Now that we know that the market is currently testing the structural level over here, we could potentially look for short buying opportunities up until there, or we can just follow the monthly target by taking our Fibonacci from the low to the high, and this would be our overall target there as well. So the minus 27 is also always used as a first take profit in the market. So if you are going to look at buying the dollar index or buying any pair against the dollar index, you could potentially use this as two opportunities for you in the market as well. Now the next thing we're going to look at quickly would be the order flow data. Now the order flow data, for those of you that don't know, basically tells us what the big banks, the hedge funds and the institutions are doing in the market, so the biggest speculators as well. Now we can see a base of the last report if we look at the buying positions. So the hedge funds, obviously they came in last week. Sorry about that. So hedge funds obviously came in last week and the previous week, and they added almost 4,000 buying positions. And last week you can see that they added another 947 buying positions as well. They added 85 sellings and then the sell positions, and then they came back and they closed minus 727 of their selling positions. So they haven't sold it, but they haven't bought it as much either. Now we can see how the overall net positions had increased from 31k to 36k and 35k to 36k as well. So we can definitely expect the dollar to get stronger in the short term as well. Now Let's look at some fundamental data. So this article comes from CNBC, and they said that December jobs report expected to be strong with no impact yet from the Omicron. Now, I know I said that I expect the NFP to be negative, and if it's not, I said it was going to be a scam, because I thought that the Omicron would have the impact based off the amount of COVID cases that we had over there. But then I remember that this job report is for December and not for January, because those Omicron cases was only published around January and not December. So we can see it says that the economists, sorry, they expect 422,000 jobs were added. So they expect 422,000 jobs to be added. So that's basically double the pace that there was in November, because I think in November we had 200 and so in November we had 210,000. Sorry about that. So also here they speak about the rapidly spreading of the COVID Omicron variant did not impact hiring in December. So like I said, now I thought that that would carry over into January, but the NFP data speaks about the job reports for December and not for January. So we could probably see in January's report next month the impact that the Omicron has had. So across the board increases are expected. So we can expect the increases of the Omicron to continue to increase as well. Next thing I want to speak about also, Economist Forecast 422,000 jobs were added in December, double the 210,000 we saw in November, according to the Dow Jones as well. So if you go and have a look at the Dow Jones quickly over here, so we can see here for the Dow Jones started, very positive in December. Let me just close this. So the Dow Jones started very positively in December. We saw a short sell-off, but for the remainder of December, the Dow Jones was quite bullish as well. Again, we can see how the bearish momentum is starting on the Dow Jones. So, so that could potentially carry over into next month's job report. So then the unemployment rate is expected to slip by a tenth of a percentage point to 4.1%. Again, these are just expectations. And then we can also see here, where is it now? The average hourly rates were expected to be up 0.4% in December, or 4.2% year over year, compared to a 4.8% gain according to the Dow Jones as well. Now, I'm not going to go through this whole article, but I do want to speak about this heading that we have over here. So it says that anybody can get a job. So it says here, Swang said hiring should be up across the board in December. Now these are all speculators that's coming out, giving their thought, just like I'm sharing my thought process with you guys as well, led by strong gains. So basically what I want to speak about over here, it says that anybody can get a job who wants one. We said that in the dot-com times, and it was nothing like this. And I don't think it's only for the next 18 months. Companies want to hire people, Kimball said as well. Also, what he said is that in mid-December, companies extended stay-at-home work, and some employees were told to work at home for a few weeks, as in the case of Goldman Sachs. Apple delayed the returns of its corporate staff to offices indefinitely. Well, I'm not going to speak about that, but we can see how there was a continuous growth with the jobs report. So we can, from where I'm sitting and based off the data that I gathered over here, we can definitely expect the NFP to be positive for December. But moving into the future, probably next month's report won't be as positive. And then we've got the interest rates that they have spoken about somewhere here as well. If you want to, you can just go over to CNBC and just go over the report as well. So they do speak about the interest rates hikes that's coming as well. So they're obviously going to strengthen the dollar as well. So we can expect NFP to be positive today. We can then expect NFP to be negative based off the job reports, because of the effect that the Omicron is going to have on the economy. And then probably in March we could see another boost, purely, but that boost is probably going to come from the interest rate hikes, and not from um, uh, 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 and not from not from the interest. Well, the boost is going to come more from the interest rate hikes, as opposed to the Omicron. But in the in the short term, we can definitely expect the dollar index to get stronger over here. Let me just close these ads. Stronger over here. Purely based off the data that we have right now. Next month we could potentially see a sell-off based on January's data, and then March we could potentially see the dollar slightly getting some strength as well as investors come back because of the interest rates starting to hike, and then probably moving on, the COVID cases are going to surge. Then everything, yeah, and then we're just gonna have a repeat of 2021 there as well. Now, if you enjoyed the content, if you have enjoyed the video, guys, smash that like button for the YouTube algorithm to inform all people of what's going to happen today as well. And I know I send out a sell to you guys that's in my Telegram group. I send out a sell to you guys as well. So the best thing I would, well, I don't know what happened there. So the best way to approach that situation over there, I would say, is just before the NFP does start, I would advise you guys to just put the stop loss to break even, because because of the data that was provided. Now we could potentially see the NFP hike all the way to the upside because of the positive data that we are expecting. Okay, well, thank you so much for your time. And as always, guys, please don't be shy. Let me know down in the comments below, okay, exactly what it is that you would like for me to cover in my next video. And as always, cheers for ears.